Imagine waking up and the entire financial world is buzzing about one headline. Not a CPI print, not a Bitcoin move, not even an earnings shock. A political bombshell. Trump just slammed Fed Chair Jerome Powell, calling him incompetent or crooked. Now listen carefully, because this isn't just politics. This isn't just a headline for clicks. This could be the beginning of a market chain reaction, affecting stocks, the dollar, gold, and yes, Bitcoin. And the scariest part, it could happen faster than most people realize. So in this video, I'm going to break down what this headline really means, why it matters for global markets, and what could happen next if this situation escalates. Because the next few weeks could decide whether markets surge or suddenly crash. What just HAPPNED? Let's start with the headline. Bloomberg reports, Trump says Fed Chair Powell is incompetent or crooked. That's a powerful statement. And it lands at a very sensitive moment. Inflation is still a concern. Markets are addicted to rate cuts. And investors are positioning for the next big shift. Now here's the key. When a political leader publicly attacks the Federal Reserve, markets don't see it as drama. Markets see it as risk. Because the Fed is supposed to be independent. And the moment independence is questioned, confidence gets shaken. And confidence is the foundation of modern finance. 2. Why this is not a small news. Now you might be thinking, okay, politicians always talk, why does this matter? Because this isn't just words, it's about control. If markets believe the Fed is going to become politically pressured, then investors begin pricing a new reality. Decisions may shift. Rate paths may change. And the US dollar could lose credibility. And when credibility weakens, capital starts moving. But hold on, because here, where it gets dangerous. 3. The market fear bad news. It fears uncertainty. Markets can handle high rates, war risk, even recession fears. But markets hate one thing more than everything else. Uncertainty about the system itself. And when the Fed chair becomes a political target, the system itself feels unstable. Which means institutions may begin to hedge aggressively. And hedging creates volatility. 4. The first impact, stock market. Let's talk about the S&P 500 and Nasdaq. If investors start thinking Fed policy may become political, 2 possible scenarios appear. Scenario A, markets rally short term. Because traders might assume pressure equals rate cuts sooner. Rate cuts equals liquidity. Liquidity equals stocks pump. So in the short term, we could actually see a weird outcome. Stocks going up on chaos. But don't relax yet. Because scenario B is the real monster. Scenario B, markets crash due to credibility risk. If investors believe inflation may return, or Fed policy becomes unreliable, or US debt management becomes unstable, then institutions will move capital into safety. That means stocks drop. Volatility explodes. Risk assets get sold off. And this is not hypothetical. It has happened before in history. Markets collapse not from bad news, but from trust collapse. 5. The dollar, the real battlefield. Most people watch stocks, but professionals watch the US dollar. Because the dollar is global oxygen. Now ask yourself, if the world starts doubting the Fed's independence, what happens? Answer. Foreign investors become nervous. That could mean weaker demand for US treasuries, reduced global confidence, and a softer dollar trend. And once the dollar weakens, commodities jump, and risk assets become unstable. But wait, because the next part is where you need to pay attention. 6. Gold, the fear indicator. When confidence breaks, gold becomes the emergency exit. Gold rises when trust falls. Money printing expectations rise. The dollar weakens. And chaos increases. So if this Trump versus Powell battle continues, gold could start moving aggressively. And gold moving is a signal. Gold doesn't move because people want profit. It moves because people want protection. 7. Bitcoin, the wild card. Now here's the big question. What does this mean for Bitcoin? Bitcoin is no longer just crypto. It behaves like risk asset in panic, hedge asset in long-term distrust. So Bitcoin has 2 faces. If markets crash suddenly, white heavy checkmark BTC may dump short-term with stocks. But if trust in institutions weakens, white heavy checkmark BTC becomes a long-term narrative winner. Because Bitcoin thrives on a single idea. We don't trust the system. So ironically, the more political chaos touches the Fed, the stronger Bitcoin's long-term story becomes. But here comes the shocking detail. 8. Why this could trigger a market shock. The market is fragile. Not because of fundamentals, but because of positioning. Right now, traders are leveraged. Institutions are sensitive to volatility. And retail is chasing pumps. That means a shock headline can trigger stop losses, forced liquidations, panic moves, and massive swings. And Trump vs. Powell headlines are exactly the type that can shock the market overnight. Mid-hook retention. So the real question is not, is Trump right or wrong? The real question is, will this headline change market expectations? Because markets move on expectations, not truth. 9. Future Scenario 1, the liquidity trap. Let's play the most likely scenario. Trump attacks Powell. Markets start assuming Fed will get pressured. Rate cuts will come sooner. Liquidity returns. So the market pumps. S&P up, Nasdaq up. Bitcoin up. Retail goes crazy. But here the trap. If inflation hasn't cooled enough, rate cuts become dangerous. And dangerous rate cuts can lead to inflation reigniting. Now imagine that. Inflation up again, right arrow, Fed forced to hike again. That's called policy whiplash. And policy whiplash destroys markets. 10. Future Scenario 2, the Fed stands strong. Another possibility. Powell remains firm. No political pressure. Fed continues current policy. In this scenario, markets might correct because hopes for early cuts die. Dollar strengthens. Gold cools down. Bitcoin becomes volatile. This is the hard landing risk. Because if rate cuts don't come, weak sectors break. And the market starts to price recession. 11. Future Scenario 3, total escalation. Now this is the nuclear scenario. If Trump's narrative intensifies, more attacks, legal political actions, threat of replacement pressure, then institutions begin pricing institutional instability. That is when dollar loses momentum, gold explodes, Bitcoin narrative rises, and stocks become extremely unstable. This scenario is rare. But if it happens, the market reaction will be violent. And this is where oil comes in. 12. Oil impact, the hidden weapon. Political tension often triggers geopolitical waves. If Trump pushes tariff strategy, Iran-related tension rises, oil market reacts. Oil is inflation fuel. So oil rising means inflation risk rises. Fed becomes trapped. Markets panic. That's why oil is the silent killer. 13. What you should watch this week. If you want to predict what happens next, watch these 5 signals. Dollar index DXY. If DXY drops hard, right arrow, trust is weakening. 10Y Treasury yield. If yields spike, right arrow, markets fear inflation plus debt risk. Gold movement. Gold rising equals fear rising. S&P volatility VIX. VIX up equals liquidation risk. Bitcoin correlation. If BTC starts decoupling from stocks, right arrow, big narrative shift incoming. 14. The big truth. This is not about one man. This is not about Trump. This is not about Powell. This is about the market realizing something. The financial system is becoming more political. And when money becomes political, markets become unstable. That's why this matters. Because once investors stop trusting institutions, they begin looking for alternatives. And that's where Bitcoin enters the story. Not as a meme coin, but as a global hedge narrative. 15. Final prediction, powerful. So here's my prediction. In the short term, this headline will create white heavy check mark volatility and trading opportunities. But in the long term, if Fed independence keeps getting questioned, we will see more gold demand, higher inflation fear, weaker dollar pressure, and stronger Bitcoin narrative. And markets will swing harder than people expect. Because the most dangerous markets are not weak markets. They are uncertain markets. Power outro plus CTA. So here's what I want you to do. If you want to stay ahead, don't follow the noise. Follow the signals. Because headlines create emotion. But signals create wealth. If you want daily Bloomberg News breakdown with future prediction, hit subscribe. And comment below. White heavy check mark, are you bullish or bearish after this Trump versus Powell story? Because the next big market move might already be starting.